Welcome to the Friday edition of the Tech Stocks Daily Podcast. Although the markets are closed today for Good Friday, the tech world never truly sleeps, and we've got some fascinating snippets to share. Today, we're diving into Meta's strategic turn away from news, MicroStrategy's Bitcoin gamble, Google's tantalizing Pixel 9 leaks, and the legal woes shadowing Amplitude. Each of these stories sheds light on the dynamic shifts and challenges within the tech sector, offering a glimpse into what drives market sentiment, even on days the market stands still. Stay tuned for an intriguing breakdown of today's top tech developments. Today's big tech headline circles around Meta and its strategic shift that's got everyone talking. Let's dive into the details of why Meta's making news today and what this means for the industry and its users. Meta, the behemoth behind Facebook, Instagram, Messenger, and WhatsApp, has long been a dominant force in the social media arena. With a user base nearing 4 billion across its family of apps, Meta's influence on how we consume media, connect, and even perceive the world around us cannot be understated. The major takeaway here is Meta's decision to scale back further on news and politics by discontinuing the dedicated Facebook news feed in the US and Australia, a move set to take place early April. Why is this significant? Well, a bit of background for context. Launched back in 2019, Facebook News was Meta's attempt to create a dedicated space for users to access curated headlines from both massive news corporations and smaller local outlets. However, Meta's latest maneuver marks a notable pivot from this approach, indicating a lesser emphasis on news and politicized content on its platform. Despite shutting this feature down in the UK, France, and Germany last year, this move isn't exactly a surprise, but more a continuation of Meta's evolving content strategy. But what's the reasoning behind this strategic retreat from news content? Meta's spokesperson, Danny Lever, clarified that this decision doesn't mean a total blackout on news. Users can still encounter news articles through shared links, and news organizations remain free to post and promote their content, akin to any other user or organization on Facebook. The crux of this decision seems to hinge on addressing the long-standing critiques about Meta's role in the spread of misinformation and its potential in fueling political polarization. This strategy aligns with the feedback Meta has received over the years concerning its handling of political content. The company ensures that this change primarily affects how the system suggests content, leaving individuals with the control to tailor their feeds according to their preferences. It's a move that underlines Meta's intent to recalibrate the balance between providing a platform for free expression and mitigating the spread of misinformation, especially with critical political events on the horizon, such as the US presidential election and other significant races. Interestingly, despite these alterations, news content currently constitutes less than 3% of what users globally see in their Facebook feeds. Yet, a 2023 Pew Research study suggests that half of US adults still turn to social media for news, with Facebook being a leading source. This indicates a disconnect between the usage patterns observed and the company's policies, hinting at the intricate dynamics between news consumption and social media. Meta's decision to phase out the Facebook News tab underscores a broader trend within the tech and media landscape, reflecting the intricate interplay between technology, politics, and media in the digital era. As the company moves forward with this strategy, it reiterates its focus on user feedback and refining its approach to content curation. However, with misinformation continuing to pose a challenge, how this strategy will impact the broader digital discourse remains to be seen. MicroStrategy, a company that has effectively transformed itself into a Bitcoin investment vehicle, saw its stock moving higher again this week, an uptick linked closely with Bitcoin flirting with all-time highs. Interestingly, despite MicroStrategy's stock rising by 11.9% this week, analysts are sounding the alarm, suggesting that the company's shares are trading at an unjustifiable premium relative to the actual value of Bitcoin on its balance sheet. Let's dig into the details. Originally a niche software company, MicroStrategy shifted gears, leveraging all its resources and even taking on substantial debt to purchase Bitcoin. This bold move has apparently paid off, with their stock skyrocketing by 500% in the past year alone, catapulting their market cap to the vicinity of $30 billion. Just this month, they raised an additional $600 million through convertible notes to further fuel their Bitcoin buying spree. The catch, though, as highlighted by Carousel Capital, is that MicroStrategy's stock may be significantly overvalued. The firm pointed out that the company has been trading at roughly 2.5 times the value of the actual Bitcoin it holds, a premium that's hard to justify given its relatively minor software business segment. Contrary to seeking exposure to Bitcoin through MicroStrategy, Carousel suggests that investors might be better off directly investing in Bitcoin or considering newly launched Bitcoin exchange-traded funds, which offer direct exposure at a fraction of the management fees. Moreover, amidst this backdrop, MicroStrategy's CEO, Michael Saylor, continues to express confidence, announcing a rebranding of the company as a Bitcoin development company. Saylor emphasizes the company's focus on leveraging its capital markets to accumulate more Bitcoin and foster the growth of the Bitcoin network. MicroStrategy's aggressive accumulation strategy is apparent in its holdings, boasting 240,246 Bitcoin, marking a significantly higher position compared to just a year ago. However, While MicroStrategy might see itself as offering an innovative way for investors to gain exposure to Bitcoin, analysts warn that the premium attached to its stock might not make it the most sensible option for those looking to invest in Bitcoin, especially with other avenues like Bitcoin ETFs now available. Today, Google made headlines primarily thanks to a major leak about its upcoming Pixel 9 lineup. This leak not only reveals the expansion of the Pixel family, but also showcases Google's strategy shift as it plans to launch 3 distinct Pixel 9 phones later this year. Historically, Google has typically stuck to releasing 1 or 2 versions of its flagship smartphones, making this move a significant deviation from its previous strategies. According to the information leaked by OnLeaks, Google will introduce a third XL model to its Pixel 9 range, alongside 2 Pixel 9 Pro units. This revelation comes as a surprise, considering that initial leaks suggested only 2 devices in comparison to the Pixel 8 series. Notably, the base Pixel 9 is expected to come with 2 camera sensors and a 6.03-inch display, sporting rounder edges, a flat display, and a redesigned camera bump. The design parallels seen with Apple's iPhone lineup indicate Google might be mirroring Apple's product strategy by adding a third model to the lineup. The introduction of the XL model and a second Pro unit seems to target users who find larger phones cumbersome, but still desire advanced camera hardware. The new Pixel 9 Pro XL is designed to cater to those who enjoy a phablet experience, indicating that Google aims to accommodate a wider range of user preferences with these changes. Interestingly, this isn't the first time Google has utilized the XL designation for its devices, although it retired the name in 2020 with the launch of the Pixel 5. Furthermore, Google's plans may include a total of 5 different Pixel phones releasing this year, including the Pixel 8a, Pixel Fold 2, and the Pixel 9 range, marking a significant overhaul in Google's smartphone offerings. This development illustrates Google's ongoing experimentation with its product lineup, highlighted by its recent incorporation of the in-house Tensor chipset. Additionally, Google has ceased sales of the Pixel 6a on its website, likely to make room for the impending launch of the Pixel 8a, expected around Google I/O in May. Despite halting sales, Google continues to add new AI functionalities to the existing models, demonstrating its commitment to enhancing user experiences through technology. Amplitude, Inc. is grabbing headlines today, and not for reasons that companies usually long for. The tech company, known for assisting businesses in analyzing data for their digital products and tracking customer interactions, is finding itself in the midst of legal woes. 2 law firms, the Gross Law Firm and Braunstein Gewirtz and Grossman LLC, have announced class action lawsuits against Amplitude and certain officers for alleged violations of federal securities laws. The core issue revolves around alleged misleading statements and non-disclosures relating to the company's business abilities and future prospects, specifically concerning its land and expand strategy. Both complaints highlight that Amplitude exaggerated the immediacy and effectiveness of this strategy, suggesting it was years away from significantly accelerating revenues among newer client cohorts, contrary to their earlier representations. This over-optimistic portrayal was further compounded by the claim that the surge in demand and resultant revenue growth experienced during 2Q21 was sustainable, failing to acknowledge the temporary boost given by the COVID-19 pandemic. These allegations came to a head following Amplitude's initial public offering, when it was accused of capitalizing on the inflated stock prices through significant insider stock sales. Following these actions, Amplitude's stock experienced a dramatic fall. After revealing lackluster fourth quarter 2021 results and a less optimistic 2022 fiscal guidance, the stock price plummeted over 58% in a single day, erasing significant shareholder value. With the deadline to seek lead plaintiff status approaching on April 15, 2024, this news brings to light serious questions about transparency and integrity in the tech sector, especially among firms that experienced rapid growth during the unique market conditions presented by the pandemic. So viewers, what are your thoughts on this development? Do you think Amplitude's actions were a misstep in communication or a more grave oversight in ethical financial practices? How do you see this affecting the broader tech industry, especially those companies with similar pandemic-related growth stories? Share your thoughts and insights in the comments below, and let's get a discussion going on the implications of such legal actions in the tech world. Today's market sentiment across the tech sector presents a mixed bag, with significant developments across notable companies like Meta, MicroStrategy, Google, and Amplitude hinting at various strategic shifts, legal challenges, and product expansions. Starting with Meta, the company announced a strategic decision to scale back on news and politics by discontinuing its dedicated Facebook newsfeed in the US and Australia. This move reflects Meta's ongoing response to critiques over misinformation and aims at reducing political polarization on its platform. While this decision is part of Meta's broader content strategy evolution, it underscores the company's efforts to recalibrate its platform's balance between fostering free expression and mitigating misinformation spread. MicroStrategy, on the other hand, faces skepticism from analysts despite its shares rising by 11.9% this week, attributed to Bitcoin's performance touching all-time highs. Analysts caution that MicroStrategy stock might be trading at an unjustifiable premium relative to the actual value of the Bitcoin it holds, suggesting a potential mismatch between the company's market valuation and its underlying Bitcoin assets. Despite this, MicroStrategy reaffirms its strategy as a Bitcoin development company, aiming to amass more Bitcoin and enhance the Bitcoin network, a move that has significantly boosted its market cap to near $30 billion. Google generated buzz with a major leak about its upcoming Pixel 9 lineup, revealing plans to launch 3 distinct Pixel 9 phones later this year. This marks a strategic deviation from Google's previous releases and responds to the competitive smartphone market by aiming to accommodate a wider range of user preferences with models like the XL and additional Pro unit. Google's strategy to revamp its smartphone offerings with a total of 5 different Pixel phones this year illustrates its experimental approach to meeting consumer demands and highlights Google's commitment to enhancing user experiences through technology. Amplitude is grappling with legal challenges as 2 law firms announced class action lawsuits regarding alleged violations of federal securities laws. The lawsuits accuse Amplitude of misleading statements and non-disclosures concerning its business capabilities, especially its land and expand strategy and future revenue growth prospects. This development casts a shadow on the company's integrity and raises questions about transparency practices within the tech sector, especially among firms that experienced rapid growth during the pandemic. Overall, today's market sentiment is reflective of the diverse challenges and strategic maneuvers within the tech industry, ranging from efforts to curtail misinformation and pivot business models to legal liabilities and product expansions designed to capture more market share. As we wrap up the week and edge into the new one, the mixed market sentiment we've observed today provides some strong signals about the potential directions various sectors of the tech market might take. Let's dive into some informed speculation based on current trends and dynamics. First off, Meta's decision to phase out the Facebook newsfeed in certain regions could prove to be a significant turning point for how news content is consumed and distributed on social media platforms. While in the short term, it may lead to fluctuating user engagement levels, it's possibly a strategic bet to foster a more diversified content ecosystem that could attract a broader user base. In the coming week, we should keep an eye on any immediate user or publisher response and whether competitors might adjust their strategies accordingly. Long-term impacts on Meta's user engagement metrics and content strategy could set the tone for broader industry shifts in content curation and distribution. MicroStrategy's unabashed embrace of Bitcoin remains a high-stakes gamble that may continue to sway its stock's volatility in correlation with the cryptocurrency market. Given the unpredictable nature of cryptocurrency prices, MicroStrategy's market performance could face significant fluctuations. Analyst skepticism poses a cautionary backdrop, suggesting that prudent investors will closely monitor Bitcoin trends as a proxy for MicroStrategy's trajectory. Any major movements in the Bitcoin market in the coming week could be mirrored in MicroStrategy's stock performance. The leak about Google's Pixel 9 lineup reveals an aggressive push into the competitive smartphone market. As Google plans to flood the market with new options, consumer reactions and competitor responses will be key factors to watch in the week ahead. Should there be additional leaks or official announcements, they could generate significant buzz and potentially affect Google's market positioning against rivals. Observers will be keen to gauge market anticipation for the new models and how this might impact Google's market strategy moving forward. Lastly, the lawsuits facing Amplitude highlight the growing scrutiny on tech companies about transparency and business practices. While legal processes are slow, the market's reaction to such lawsuits can be swift. The coming week could see further developments in investor sentiment and Amplitude stock performance. Any immediate response from the company or new information about the lawsuits could influence perceptions about its future prospects. In summary, the week ahead may be shaped by the unfolding consequences of strategic shifts, cryptocurrency fluctuations, competitive maneuvers in the tech market, and evolving legal narratives. These dynamics underscore the volatile and ever-changing nature of the tech sector, where innovation, regulation, and market sentiment intertwine to shape the future. In conclusion, today's tech market activity has been a vibrant tapestry woven with strategic shifts, regulatory developments, and innovative product teasers, presenting a mixed sentiment that captures both the challenges and opportunities within the tech industry. From Meta adjusting its content strategy and MicroStrategy riding the Bitcoin wave, to Google tantalizing with Pixel 9 leaks and Amplitude facing legal battles, it's been a day of significant news shaping the market's direction. These developments underline the dynamic nature of the tech sector, illustrating how strategic decisions, market speculation, and legal issues can influence not only individual companies, but also broader market trends. If you found today's summary insightful, don't forget to like, subscribe, and share this video with others. Make sure to return on Monday for another dose of the top tech news, keeping you informed on where the market might be heading. Have a fantastic weekend, and thank you for tuning in.